The Bank of Canada just dropped interest rates by 0.25%. And what is that going to mean to Kelowna's housing market? What does it look for in terms of pricing, sales, and overall inventory? We're going to break that down and look at the last 10 years of local data right now for Kelowna to see how its interest rates drops and increases have impacted the market. And this is my task, my duty to be able to provide you market information that you're getting nowhere else. So if you are getting any value out of these videos, hit subscribe. I'd love to hear your feedback, and in the comments, let me know any other videos you'd like to do. But without further ado, looking at the 10 years worth of data, it's evident supply and demand. Oftentimes things are getting a little bit cheaper. You can expect when interest rates drop, you're going to see more activity in the marketplace. And the volume, overall sales volume, based on the data that I put together, and I analyzed 10 years worth of data and correlation to all the rate increases and all the rate drops from the Bank of Canada, the normal volume will spike between 2 to 3 months. And so when you're looking at the rate drop, you're going to see more activity in about 2 to 3 months. Yeah, that's putting you into January and February, which is actually one of the busiest times in the season. So this could make a huge impact next spring. So as a home buyer, you're gonna wanna know and getting around it, because we're gonna see a lot more inventory, a lot more people in volume of people looking to buy in the new year. And as a home seller, keep that in mind. If you're going to the market, come February and March, the early spring market might be hotter than normal. Spring market normally will peak in May, but we can maybe see, depending on your type of home, and especially if your home is one that is very interest rate sensitive, a home that maybe first-time home buyers would be looking at, maybe even move-up buyers are looking at, and that might be an opportunity to hit the market early and be strategic around it. We also notice when rates rise, the confidence really will drop immediately. When looking at this data, there's not that much of a lag. It just drops off. When rates, people just hold back and just wait and ride out. That's really what we've been experiencing in the last couple of years. If you don't have to sell, if you don't have to buy, then a lot of people aren't doing that in the marketplace. But with rates coming down, that might be changing. When you're looking at the correlation of pricing, prices usually will lag about 3 to 6 months. So when you're looking at rate decreases, you can expect to see prices rise in about 3 to 6 months. So what that's meaning is home buyers in the marketplace, right now it might be your best time. When you're looking at it 6 months from now, the odds are that the property you're looking to purchase is going to be a little bit more expensive. There's a lot of things happening in the market, a lot of things happening Canada-wide, a lot of things we can't control in the economy and a number of different factors. But when you're looking at the numbers, I think Kelowna is in a different position than a lot of other cities in Canada. And people might laugh at me, and at the end of the day, there's this natural beauty that a lot of people come. And it's the reason why we chose Kelowna. It's the reason why it's not just one industry driving Kelowna. If you go to Saskatchewan, where I'm from, potash, mining, farming. In Alberta, it's oil and gas. You look at a number of different industries, and those are really driving the confidence in the marketplace. But when you look at Kelowna, it's set up pretty good. And last week, a home just sold for $30 million. And last month, a home sold for $17 million. Those are the record high prices. Lots of confidence in the marketplace. A lot of people putting money here. And people with that kind of money, and that is FU money. To be able to buy a property like that, $30 million, just imagine that. Why are they investing in Kelowna? Just ask yourself that question. When you're looking at 2025 and the rate drops, so every major rate drop since 2015 has led to a 5 to 8% rise in sales. This is overall total sales and what it's rising into. And what I noticed in this data is 2 to 4% of price gains within the 6-month period. So we're seeing an increase in activity about 5 to 8%, and prices are coming up 2 to 4% within that time period, within 6 months of after the rate drops. I think Bank of Canada normally will expect about 12 to 18 months for all these rate drops to really filter through the entire economy and be factored back in. And so with those lags, those are what you can expect. The median prices right now for the entire market, if you're to bunch them all together in Okanagan, is $723,000. And that was as of August. Sales are roughly around 360 homes sold, and inventory is around 9. This is heading to flow. The biggest opportunities out there right now are for buyers. If you're looking at homes under $900,000, there's going to be opportunities out there if the homes are meeting your criteria. And if you're not finding the type of homes you are looking for, we have access to off-market deals. And if you want to get access to those off-market deals, pick up that phone, give us a call, and we'd love to set you up and see if we can find you the right property. Not all properties do sell on the market. MLS is just one avenue we do. We leverage our network to be able to find you the right place. And if you're a home seller, the odds are probably going to be in your favor come spring. So you should probably be waiting and maybe planning for a spring. But oftentimes sellers are also buyers. So this is actually the most opportune time to be really get a clarity call on it. If you're a home buyer, if you're a home seller, you just need to make sure. Homes well priced will sell quickly. So you, as a home seller, don't need to be waiting on it. The odds are probably in your favor right now, but home sellers are oftentimes home buyers as well. So it is actually a good opportunity right now to schedule a clarity call to know if what the right option is going to be for you. We had a clarity call with clients last week actually, which led us to going to view some properties. The properties they viewed that were on the market actually met like exactly what they're looking for. But now that they found one of the right properties, they might be considering alternative options to be able to get the property. Whether it's pulling out equity out of their existing homes or bridge financing, there's a lot of different avenues we can take to be able to secure your home today, not have to move out of your other home. So there's opportunities all over the place, but sellers, you're probably going to see the highest benefit waiting until spring of 2026. Because of the lag, because of the price drops, you can oftentimes expect it. The proof is just in the numbers that I'm just giving you. So the biggest takeaway with this drop in the interest rates, it's going to most likely spark activity across the board. We might see an initial uptake in November, just being seasonal slows and people trying to get in before Christmas season comes. But expect January and February of 2026 to be a busy couple months. And with inventory dropping off right now in heading into the seasonality, Kelowna's market might tighten up faster than normal. We might start to see the months of inventory really drop off. We could expect another 300 listings to drop off just naturally without an uptake in sales heading into December. We're not really in a frenzy. It's not going to be what it was in 2022. It's not going to be like what it was at 2021. It's a more balanced market and there's opportunity. Right now at home sellers, like if you have a place to buy but you also have to sell, there's options in terms of subject to selling your home. We're not in the competitive markets where you need to go subject free or you can't put in financing. We're not in those markets anymore. And we haven't been for a couple of years. But I did just have that conversation with those clients. There's nothing wrong with putting in a financing term. If it means you're getting the right property and you're being able to pull out some equity, as long as you have the equity available, and you're making sound decisions, chances of you being able to sell your home when the time is right and getting it ready and actually netting more, probably going to be in your favor. We'll make things happen. There's opportunities out there. So if you want to know what this means for your neighborhood, for your property, or your situation, just let me know. Pick up that phone, give me a call, shoot us a text message, however you want to get a hold of us. And drop in the comments too, if you're looking at doing something. I'm just curious what people are looking to do. If people are looking until 2026, 2027, people are looking right now. Does this rate drop change your mind? Because after the data, looking at the data, it changed my mind, to be honest with you. So please subscribe to the channel if you're getting any value out of this. Hit me up, email, text, call me, whatever you guys need to do. Looking forward to chatting with you. Take care.